The Assistant Reserve Bank of Australia Governor, Sarah Hunter, recently said the Australian property market is facing a perfect storm. Now, that sounds scary. So today, I'm going to unpack exactly what she said. I'm going to look through a number of charts to verify if what she's saying is accurate. And ultimately, I'm going to wrap it all up and show you what it means for you, whether you're thinking of buying a property or you're already in the market. Let's dive in. Hello, it's Nero here. And if you're new to my channel, hit that subscribe button because I talk about all things property and economy related. So, in her recent address, Sarah Hunter said there is no quick fix to the housing crisis. The Reserve Bank has a fairly bleak message for those struggling with housing costs. There won't be a quick fix to affordability problems. Sounds like then even the RBA is saying that property prices are unlikely to come down on a macro level. But why? What is driving these statements? Well, let's begin by looking at some data. So here's the first graph she refers to, which is the drivers of underlying demand for housing. And what you can see is that this first top chart talks about average household size. It's the blue line. And what you can see is that back in the late 80s, we had an average of 2.8 people per house. Now that's dropped all the way down to 2.5 people. So the average household size has diminished. Now initially when you look at that, you think that can't be a big driver for the current housing crisis that we have. However, in her speech, Hunter says that if for some reason average household size rose back to 2.8, we would need 1.2 million fewer dwellings to house our current population. No small difference. And our housing shortage right now is actually less than 1.2 million dwellings. So just the fact that we have fewer people living in each house on average has made such a staggering difference to our current housing crisis. Then if we go and look at the population growth at the end of each year, which is the red line here, you can see that since 2020 or so, we've been rising quite dramatically. We're currently rising at over 2% per annum. So we have this double whammy from a demand perspective. We have fewer people living in each house on average and more people in total who need property. That's why we have such excess demand for property in Australia. Okay, so that's all demand related, but how does that actually relate to supply? Well, this next chart paints quite an interesting story. So here we have the underlying demand and supply per financial year. And what you can see is that dwelling completions reached a record high around about 2017, have been slowly then falling ever since. Here we are with completion levels at 2023 according to this data. Mind you, in 2024 we're on track to build less than we did in 2023. But even if we look at this data here from 2023, we match it across, we can see that we're only building as many properties as we were back in about 2014, 2015. But yet look at this grey line, population growth. We've gone through the roof. So we can clearly see on a macro level then that demand is so much higher than supply. The Assistant Governor then goes on to talk about why are we having such supply issues in Australia? Why are we unable to fix this housing crisis and have enough properties for the number of people who want to live here? She says, in the early days of the pandemic, COVID-related supply chain disruptions significantly limited the sector's ability to respond to increasing demand, which was partly linked to the home builder program. Materials, fixtures and fittings and skilled labor were in short supply, and shipping delays significantly extended build timelines. While much of the supply chain disruption has been resolved, so the worst does look like it's behind us, the pipeline of projects remains elevated and some capacity constraints are still binding. Now, the charts that she then provides are very telling. If we look here on the left-hand side, we're looking at approvals, so these are properties about to be built, commencements, which are properties that have just started being built, and completions, which are new properties being built. What do you notice? All the lines are trending lower. Here we are, 2023, back to similar levels about 2014. We're just not building enough properties. But when you break it up you start to see an interesting picture. So here on the right hand side, we can see that the black line is tracking total dwellings approved but not yet completed, and it's trending downwards. However, if you look at this orange line, which is the higher density dwellings, so you're talking about apartments, you can see it's starting to actually trend upwards. However, the blue line, which is detached dwellings, so freestanding houses, that's trending downwards. Now, this is extremely telling if you're thinking about buying an investment property, because what it shows here quite clearly is that higher density dwellings are now on the increase. If you remember an earlier episode where I spoke about the budget, I spoke about how the government is really trying to address this housing affordability situation by putting in higher density dwellings, in other words, lots and lots of apartments in certain key markets, and you need to avoid those markets because in those particular suburbs or pockets of areas, capital growth will be constrained because supply will rise faster than demand. But if you stick to freestanding houses, what you can see here as the blue line continues to trend downwards, there is less and less supply for freestanding houses, yet the average Australian wants to live in a freestanding house, which means that going forward, I expect that the gap in terms of capital growth between apartments and houses will continue to stay as wide as it is and potentially get even wider. That means that on average, freestanding house price growth will be a much more than apartment price growth. And then the Assistant Governor goes on to talk about new dwelling prices. You can see here in the chart, the purple line here is tracking new dwelling prices, and just after the pandemic, it shot up vertically. Yes, it has slowed slightly, but it's still rising extremely steeply, showing no sign of actually slowing down at all, and still well ahead of headline CPI or inflation. But what does the future hold? Will this housing crisis be fixed anytime soon? Are property prices likely to come down because we have so much supply? Hunter addresses that as well. This chart here looks at building approvals versus interest rates. The green line is interest rates, and you can see we've risen quite substantially in the last couple of years. But look at building approvals. They're down. They're rising at the moment, the short term, but they're still below zero. All right, so we're not building enough freestanding homes. Detached building approvals are just too low. And finally, if we look at new dwelling investment, yes, you can see this blue line here looks like it's going to rise slightly, but it's nowhere near enough. It's nowhere near back to where we were just in 2021, where we were in, say, 2017. We are years away from fixing this housing crisis. And with migration continuing to be at all-time highs, well above our long-term averages, it shows that we have a supply issue, not enough properties being built, and yet more and more people wanting properties. So what does this all mean in the end? Well, Hunter says it well. She says that demand pressure and so upward pressure on rents and prices will remain until new supply comes online. But that doesn't mean that property prices will rise everywhere. There are certain capital cities where 98% of the suburbs are actually falling in price. Even in Perth, which has been one of the strongest markets in the country from a capital growth perspective, there are over 20 suburbs where prices today are less than they were a year ago. So what this means is that yes, on a macro level, property prices will rise. I expect the median property price in Australia to continue to trend upwards, but you do need to do your due diligence. You need to know which areas to avoid and which areas to target. And look, if you want help with that, check out the link below to get totally for free the digital version and audio version of my book. It's a full property investing blueprint based on my now over 2 decades of investing experience. Otherwise, I'll see you next time.